kind of a quiet group here, right? But the important ones are here. Okay, guys, on Zoom, we're going to get started. There's more people that might jump on, but they'll just have to catch up with us. So I just wanted to introduce Sharla. Thanks for coming in.
Thank you.
Yeah, this is great to have you here in our house. And you can kick off your shoes if you want, obviously. But welcome on Zoom. This is a really good topic, guys, because it's on everybody's mind right now, right? So we can learn about how to get more leads and how to convert leads and this and that, but talking points and having more conversations is probably just as important as anything that you can do. When people are slow or whatever, and they're like, oh, my pipeline's kind of drying up. My first response is you have to talk to more people. You have to have more conversations. So Sharla's got some great slides in here. She's going to kind of like go through navigating this housing market. So introduce yourself, say anything else you want to our audience here, and we'll get started.
Well, thank you.
Okay.
Feel free to ask away. I'll just keep going. Have somebody coming up, but I'll just bring this
So,
start. So
yeah.
I'm with Fairway, and I've been with Fairway now for about 4.5 years. And I've been in the industry about 34 years. I started when I was young, so I'm not old. But I've seen one of everything, maybe 6 or 7 of everything. But my team and I are at Fairway. I was with Chase for 22 years and in a smaller mortgage company for 10. And we have enjoyed being with Fairway, just rocking it. We call ourselves the Sharla Ellis Dream Team because we think we're that good. Being in the business that long, you make mistakes and then you figure out how to do it better and better, but we're very well oiled. And so we just love helping others. I have Tiffany here, who is my right hand, one of my right hands, and she's been with me for a number of years and just excellent, best of the best, the best in the universe. So this is us. We are in the top 1% of our production in the mortgage world, and we are currently at Fairway. We are first in customer service scores.
Nice.
3,000 loan officers. I say that only to give credibility, but also so you know that I have direct access to many people who help me with knowing about the market, knowing where things are going, how to do business. I'm coached. I have access to some economic counsel, etc. So I'm just coming today with some things I have learned I'm going to share with you. So this market is a crazy market. I mean, it's stacked against us, right? Interest rates, you've got housing shortage, you've got housing prices, you've got affordability issue. It's gloom. Yes?
Mm-hmm. Yeah, most of it.
Well, I'm here today to share a little sunshine. Woohoo! It's going to get better, and I'll back that up with you. I brought the economic data to share and show you why it's going to get better, but also because I'm an optimist. There's opportunity in this market, and we're going to talk about ways to educate and motivate our clients to take advantage of the opportunities that are existing right now. So thank you for being on this journey with me from gloom to eagerly anticipated boom. Yes. All right. First things first. I'm going to do some touchy-feely with you. The winning mindset. Mindset and attitude are going to be your biggest factors of success in this market, in a challenging market. And that goes without anything other than a period and an exclamation mark. We have to have the right attitude, we have to have the right mindset, and that will help us to persevere. Don't you love that word? This is the market that we have to persevere. So the first thing I want to share with you is you need to have a positive mindset before your actions. That means you wake up in the morning and find some reason to be happy, to be grateful. What you may not know about me is I wake up every day jolly, because that's my maiden name, Sharla Jolly. I am jolly. Okay. My dad taught me that I needed, with a name like that, I could not be grumpy. And so I do see the glass as half full as opposed to half empty. But we need to show up for our family. We need to show up for our clients, our teams. We just need to be positive, because If you're not positive, what's the opposite? And who wants to work with a negative realtor? And who wants to work with a negative lender? Nobody, right? Positive mindset before actions. The second, trust is earned, and this is really, really critical. People buy from who they trust, and it used to be in a normal market that we had all kinds of time to incubate relationships. We don't now. We want to do things fast. So do the things that create trust, that earn trust faster. Return your calls. Be proactive in what you do. Be positive. It pains me when someone posts on social media and makes fun of their clients in the real estate industry and the mortgage lenders. Call me old-fashioned, but that I don't think gets you to trust. You need to be empathetic. You need to listen. You need to be there. Be proactive. Do what it takes to build trust faster, and that's going to help you in this market. Teamwork. Know who your team is and do your part. Why do I say that? Well, if you don't have the right team and the right people on the bus, then you spend a lot of time dealing with the drama or the babysitting or whatever. And we're here to make a difference in this market, and we're here to focus our efforts on selling. And we'll be seeing that in a minute. But if we're dealing with other issues, then we're not selling. And so I want you to have a team that works, that doesn't hinder your goals. If you have a team that hinders your goals, it probably is time to have a discussion with them or have a new team. And by team, I'm talking about an assistant in the office, a part-time assistant, a team, your lender, your inspector, your title company. If they are not just there backing you so you can shine and do your part on selling, it's time for a new team. But I say do your part because there's so much friction out there already. We don't want to create it ourselves. And a unified team hums along. Tiffany can vouch for that. Over the years, I've had better teams than others, and we are really, really well oiled, and there's no stopping us. So assess your team. And a little plug for my own lunch and learn in December. Team building. It has unlimited potential if you have the right team. So teamwork, know who it is and do your part. Look ahead at opportunities, not behind. It does not matter what happened last year, last week, yesterday. What happened what it matters is what's happening right now. We can't do anything about what's in the past, but we can look ahead and we can do what we need to do going forward in the future. This is like a duh, but I have to say it, and you mentioned it. A wider network and miss fewer transactions means you've got to expand your market share. Oh, but there's no business out there. I hear agents who are hearing crickets, and others are crushing it. What's the difference? They're expanding their net. Our business will be down a little bit this year, but not down as much as others, and we have expanded our net. We're trying to expand our net. We need to do that. One of my favorite things is, do you have 100% market share? No, then there's work to do. So just remember that. The next thing is consistency and discipline. This is absolutely a requirement in a challenging market. What do I mean by that? Well, salespeople, we need to be selling. And so often we find ourselves in the weeds, and the day goes by and we say, oh, I should have made some sales calls. Well, we need to time block. We need to find the time so that we can make outbound and proactive sales calls, put in the effort, and then you will be successful. Unless you are on vacation or you have so much new business in your pipeline, and that's new business that's making you money, you should be picking up the phone and making those calls. So I want to just share with you a post of an agent that I work with. I saw her post just finishing up call night. I got 31 calls and 14 connections, and a buy and a sell and a lunch and learn. And I'm like, wow, that's impressive. So I reached out, I said, how long did it take you to make those 31 calls? And she said 3 hours, which is about right. You can make five and a half hours is really the thought behind it, because you're going to get 2 out of 5 who answer. Okay, generally, this is an algorithm. And the other 2, you can spend some time speaking on the phone. So if you have 5 every half hour, that's 10 an hour. So 31 in 3 hours makes sense. 14 connections, she's 50%, which that's high, but good for her. Usually you're not that high, but that's okay. Connections mean that I've spoken with them. The others, you've left a voicemail or whatnot, you're buying the brain cell, you're going to be top of mind, so that's okay too. But look what she did, she got a buy and a sell. What if your average loan was speaking of loan, average house price was 500,000, 3% on the one side, 3% on the other. What's that math? You're going to have $30,000 from 3 hours of work. What if that's an $800,000 home? So very worth it. Sometimes calling and outbound calls just honestly are a drag because you don't get anybody. Somebody hangs the phone up on you, but it's that effort, it's that consistency, and you're going to do it. So then she said, lunch and learn. I'm the queen of lunch and learns. I'm like, what are you doing? And she does this, which we've started focusing on, is what excellent. And I will do this with any of you. We'll go into businesses that you know, and we will talk to them about the home buying process. We will demystify the process. We'll teach them about financing. We'll teach them about the opportunities. They can hear from a professional realtor and a professional lender that the market is not tanking. And so we are picking up leads there. I have a script. We'll take in lunch. We can go in a small group, a big group. We're going into teachers and sitting there. The students leave on Friday afternoons at 1:30. The teachers have to stay till 3:30. We take cookies in. We talk with people who want to know about home buying, and we're picking up leads that way. So let's talk. But anyway, she got some connections there because she did it. Okay. All right. Do you want to increase what you're doing? Do you want to increase your sales? Yes. All right. So I want you to think about, I'm going to have you take an oath with me. We're going to say this together. I promise that I'll dedicate blank hours to sales calls each day, no matter what. You have 60 days left in the year, a couple days to gear up for it before November 1st starts. What number would you put in there? 1, 2, 30 minutes, 3 hours, 30 minutes, 4 hours. I'm committing to 4 hours for you right now. And so I want you to think that in your mind, and then we're going to take an oath and we're going to say that and make the most of 2023. Same with you guys at home. I want you to think about it. Raise your right hand. Okay, you ready? Everybody got their hour? We say it together. Okay, 1, 2, 3, hands raised. 1, 2, 3. I promise that I will dedicate to 30 minutes to sales calls each day. Okay, I'll be your accountability partner. You just committed. We're going to do some business in a hard time. We're going to have a positive mindset. We're going to put some effort, and we're going to do it. Okay. All right. Excellent. Today is your day. Your mountain is waiting, so get on your way. This is one of my favorite quotes. Positivity wins the day. Positivity backed by skill wins the market. Positivity backed by skill with perseverance can change your life. Let's do it. All right, this is my first slide. I'm going to talk to you about data. And I'm going to let Dave Stevens introduce it. He is an economic savant. I have a 3-minute recording that you can listen to, and he's going to introduce this slide. He was the former MBA president, Mortgage Bankers Association president from 2008 to 2018 or something, I forget the dates. He consults with Fairway. He's been on the Obama Council. He knows his stuff. So here is what he is saying about this slide.
Don't forget where we are, right? All of this bad news doesn't change the reality of demographics, which is the core variable to demand for homes in this country. This one's from the Public Policy Institute. It's the demographic distribution of everybody in the United States from 0 to 100 plus. And what this headline from the PPI says, and this was in a much broader presentation they gave to a whole bunch of academics in Washington about the economy and the market, not just real estate, but otherwise. It says millions of potential home buyers will age into their prime home buying age in coming years. And then it calls out these orange cohorts. As you see, all the ages are along the bottom. And it shows age 34 on the far right of the orange section. That's the median age for first-time home buyers in the United States is age 34. That's not guesswork. That's actually tracked by the New York Federal Reserve. And then the other far left is the median age for moving out of home in the out of the parent's home is age 26. That's the median age. Some move out earlier, some move out later. Why is that important? Because the moment you move out of a home, of your home, you are a new household formation. So when you hear about household formation, that's literally people who are for the first time either renting or buying a home, and that's tracked on an annual basis. And so if you look at where we are right now, aside from everything the Fed's doing to scare the hell out of the market, and the fact that we don't have refis, which is dampening our ability to be overly successful this year, and the fact that the real estate market's cyclical, which can get a little scary looking into fall and winter, I just want to highlight to you that it doesn't take away the reality that you're on the front doorsteps of the biggest wave of buying demand, not just in a while, not just in a few decades, in the history of the United States. We've never had this large a population wave coming into the median age for home buying. The baby boomers are that blue bump out there in the 50s and 60s. That was the biggest generation in America prior to this one. And the baby boomers, we started buying homes in the early 80s. I'm the biggest cohort of the baby boom generation. I was born in 1957. And we bought homes beginning in the 80s and kept buying homes for decades to come. This group is the biggest one ever in history. You can't deny it. It's coming at you. Every realtor needs to see it because they need to show this to the potential home buyers. Because one of the big questions I'm going to ask all the way through this is when a potential home buyer says they're waiting or they're not going to buy, if they're qualified and can buy, my answer is, my question is, what are you thinking? Demand is only going to increase. And that's step number one. And that shows it right here. For all of you in the business, don't get weary, man. I'm telling you, you're going to have a much better year next year and even a better one the year after that and for several years to come.
Isn't that exciting? Okay, all right. Let's talk about rates. This is the history of the Fed funds rate since 1955, and you can see raises and lowers, lower raises and then drops. This is 1955 all the way down to our present day. And the gray bars are recessions. When the Feds tighten, three things happen. And this is what I want to point out. They overcorrect. They go too high, and then it ends up in a recession, and it ends up with rates coming down. They have to ease so that they can spur on an economy that needs some juice again. So this is exactly what's happened. If history repeats itself, this is why the Federal Reserve and why the economists are suggesting that we're going to see rate drops, because they feel that the Fed has overcorrected. In some press conferences, the Feds have admitted that they have overcorrected. We'll go into a recession. We may see a small recession this time, but this is the pandemic there on 2020, that very thin line. What we don't remember is we were going into a recession at the time. Rates were ticking up prior to COVID. And then COVID came, and then the government intervened. Rates were very, very low, and now that got us into the predicament that we're in right now. So we know that rates will drop right after the overcorrection, the recession, etc. So that's one way that we and the economists know that we will see rates start to come down. You good? All right. Then the second, this is inflation. Inflation is continuing to slow. This peak is in 2022, and that was when inflation was its highest. Here we are in 2023. The gray on the outside is forecasted. or projections, but we're almost near the 2% that the feds are targeting. Why this year, if inflation was coming down, did we not see rates come down? There's several reasons. There were some unexpected things. The banking failures were part of that. That unexpected. The debt ceiling was unexpected. That caused a bunch of selling of mortgage-backed securities, holdings there, the Fitch downgrade, and then really the biggest one is the feds themselves. The feds have been holding back. They want a little bit more weak jobs report. Let's talk about that. We had a jobs report, what, a week or two ago that was rosy, but the feds, I don't want to pass judgment, but they missed it a little bit. If you peel back those numbers, you see that part of the increase were over half of the increase were part-time jobs and people who needed second jobs to survive. They were not the paying jobs that qualify you for housing, which is really what you should be looking at, or what they're supposed to be looking at when they're judging the inflation and what they do. So they're pausing, and there have been some letters sent to Congress and about that enough is enough. So we think we're on the tail end. We think that we will be on the tail end, and we're going to see some better rates end of the year and into next year are our projections. But this is really telling. We just need the feds to cooperate, right? Let's talk about 30-year mortgages versus the 10-year treasury, the spread. This is a busy chart, but the blue would represent the 10-year treasury. The red, the interest rate, the 30-year fixed rate. Historically, the spread has been 1.5% to 2% over the years, okay? Right now, it's at 3%. All that tells you is mortgage rates are generally 1.5% to 2% over the 10-year treasury. We're 3% over the 10-year treasury. The rates are in the 7s, the 10-year treasury is in the 3s. If it was a normal market, we would be in the 6s or the high 5s, just as history has repeated itself. The reason it's higher has a lot to do with servicing values, and anybody who has a 7 and 8% interest rate is obviously going to refinance as soon as rates come down. So the servicers are putting their profit in the beginning because they aren't going to have it over time. So that's a big reason why. And the feds are tinkering with things. That's a good word to use. As soon as they get done, and as soon as they say that they're done raising the rate, then we would and should see this normalize. I'm an accounting degree from the U with an economics minor, and so I follow this and I believe it. As much as I understand the basics of economics, we should see lower rates, and we will. So if you know that history will come back, this is just not a normal market for various reasons, we should see interest rates. The feds will keep their hand on the neck of the economy until they feel that that is right. It is not to be so. We may not see a raise in November because of the recent happenings. If we do, it's probably on the tail end that we'll see. Let's keep going. So that's interesting. This is a lot of numbers on the chart, but I want to point out a few things. So this would be the MBA's forecast. Mike Frattitoni, mild recession is what he's expecting. He's expecting originations to decline in 2023, which the rest of 2023 would not finish out as we expected. It's just slight decline, but back up in 2024 and 2025. If you look over here, he gives some numbers of total existing homes and new homes, but what I want to focus on is the 30-year rate projection. The end of 2023, he projects that they will be 6.3, and in 2024, 5.4 or 5%. So who cares what it is? And I almost don't, I want to stand up there and say, don't look at it, because we don't know when rates will come down. And December 31st, if they're not 6.3, like Sharla, we don't know that. But it is expected to go down, and the data is showing us that it should, and we're on the tail end of the recession. So it's exciting to me to think about that.
Sharla, who is
Mike
Tony?
Thank you. He's the chief economist of the Mortgage Bankers Association. So he's one of the biggies, a very talented accountant. So that's that. All right, good. So I want to say 6 to 7% rates are a normal balanced market, as much as we don't want to hear it. We're not gonna see the 2s and the 3s again. That's artificial, that's government intervention, etc. So again, control what we can control. How do we sell that? We educate. We are educators, okay? We're gonna put on your hat and we're gonna educate. Let's keep going. How do we educate our customers? This is an article from earlier this year. Buying a home became a key way to build wealth in America. Highlighted down here, even though we're at 7% and the supply of home ownership feel out of reach, it remains an important way to build wealth in the US. Let me show you. This chart here, if we take a look at the orange is housing wealth. The green would be our renters, anybody who's renting a home. And the blue is non-housing wealth, the investments, stocks, bonds, non-housing. So you take income. Look at the cutesies under 26,000, the biggest, and 26 to 46, 46 to 74, the biggest part of their net worth is a house. Yes. That's how we can help our customers get into houses. You go over here to the 127, 192, over 192, obviously people have more money to spend on their investments and things, non-housing. But if you take a look at it, look at the orange, that's housing wealth. That is a component of net worth, and we get to help these cute borrowers get in and realize their dream of home ownership and help build their net worth. It gives me goosebumps to think about it. Now, I realize that affordability has knocked several people out of the market, but there are still people who want to buy and still opportunities for those who can afford it. Remember, is your market share 100%? No, there is work to do. Just because we're seeing rates at this level does not mean people are going to be intense. They need a great realtor. It may as well be you. They need a great lender. It may as well be me, right?
Sure. What does the owner renter mean?
The owner
The
is
number.
home owned percentage or your share of net worth in thousands. So as an owner, you have 102.5, the renter 1.5 in thousands, very little net worth. Does that make sense?
Is that the income?
Income is on the bottom,
Oh, okay.
but the percentage of, so a renter has very little net worth here, the owner has more. It's just an illustration of buy a house, because that's where your net worth is, yes? As a renter, you don't have it, and you don't have the discretionary income to have other investments. So your house is the biggie. You can help people build net worth, kind of what that slide is showing. Does that make sense? Let's talk about housing prices. You get some people who say, oh, there's gonna be a crash. What has housing done since 1965? It has increased, yes. So housing is really a sure bet. We're preaching to the choir. Home prices continue to rise. And the biggest news of all, buying during the dips is a good thing. We are in a dip right now, okay? All right, let's keep going. Shortfall is about 1.6 million homes. This is from 1939 up to 2020, projected to 2029. The blue is 1 unit, single family. The orange, 1 unit attached, a townhome, condo. 2 to 4 is the gray. 5 to 19 would be the gold. Light blue is 20 or more, and then manufactured housing is that green. We haven't been this low on supply since World War II, but why? People were fighting the war. And they came back, there was the New Deal, building the economy, etc. We're low, we're in a shortfall because of COVID, the housing supply, the supply chain, etc. So there's a big worry about that. Now put on your economic hat. And what does that mean? Supply does not equal demand. What is going to happen to home prices?
You're gonna go up.
I know. So this is an opportunity right now to help our customers know there is an opportunity ahead of, I don't know if that is this. When I educate a customer on that, I will talk about buying now at a 7% rate in the 7s versus waiting. If you can get in the 6s, but you're gonna pay a higher price, your payment is about the same. What if you waited until you're in the 5s and it appreciated? So appreciation each year, 5%, 4%, whatever. You save about $200 is all. And then you can refinance this and save 500. So it's a math game for anybody who will understand it. Then it is important to help them. The news is not helping educate. This is our job. And as much as I preach this, I do have a niece in Logan. She needs to buy and she won't listen to me. So I can't get her to buy. So I understand the struggle is real, but those borrowers who are there and who can afford it, there is some opportunity in this market. Let's talk about this. It's a busy slide, but it has some telling points to it. All this is showing you there is pent up demand. In the same county, the demand has dropped. People are not willing to give up their 2% and 3% rate to scoot over to a bigger house, family size, or the downsizing or whatever. No, I'll make it work. But you know, there are people that need to move or want to move. So when rates come down into the 5s, you'll have some of this freed up, and that will create a little bit more supply. People are, it's increasing if you're moving in the same metro area. Oh, my job is forcing me to go to Utah County. So that is happening. Same state, same interstate, those numbers are up. So as you're calling on your database in the 2, 3, 4 hours you've committed to do, you're going to talk about life events. How's it going? Oh, you just welcomed a new baby? That is so exciting. Oh, your daughter's off to college. You're empty nesters? Wow. Ding, ding, ding. There are reasons people will move and need to move. You got a job, you're relocating. Oh, you're going to Colorado. I can help you. Find an agent there. And you are listening for life events and for reasons that they're going to move. And again, some won't move, but others need to. So that's what you're calling your database on. Somebody said, I don't know what to say to my database. Well, the market's the big elephant in the room, right? We're calling, and our script is, hey, the market is scary. I'll share my script with you. The market is unique. We just wanted to offer some insight to it. If you wonder about it, where your house prices are going, where rates are going, let's book an appointment with Sharla and let's have a conversation and see what's going on. And by the way, if you know of anybody who's buying or also is afraid of the market, let's chat with them. And here's a free appraisal certificate, and you can pass it along or use it yourself. Love you. So it's a good time to reach out to borrowers, and they want to hear from you. You're going to uncover life events because there's a reason to buy now, and then you're going to get them on your list when rates have come down, and there'll be some who'll buy then. You heard Dave Stevens say it. We are on the biggest wave of home buyer demand in American history. It's coming our way. And just to put this into perspective, the median age of home buyers is 34. You got a very big sector of first-time home buyers up and coming, and past first-time home buyers who will be move-up buyers, etc. I have agents who have said, I don't work with first-time home buyers. And to that, in my mind, I'm like, oh, I'm so sorry. I have 1.5 million first-time home buyer right now. Physician, go ahead. So don't discount the first-time home buyers. At 34, they may not be scraping by. They may be buying the $6, $7, $8, $9 million home, that they need your help and your guidance there, and double incomes, etc. But there is a big wave coming. And if we look at it and you think, okay, I can help them with their first home, then they'll start making some money and they'll need to be in that particular zip code. I can help them move to that home. And then they need a second home in the mountains. I can help them with that home. And then their kids are going to need homes. And so this is the wave next decade or more that we are going to have at our fingertips. What does it represent? It's about 50 million of the population. That's pretty huge. And then this over here, homeownership by age, just shows you that if you're under 35, the first gray line, you're about a 40% chance that you're going to be a homeowner. If the gold line, you are 35 to 44, you're 70% in that range owns homes. 70% of our 50 million are coming your way as potential home buyers. Yes, isn't that exciting? So see, got work to do. This is one of my very favorite slides, and it shows us the blue is purchase. Let's focus on purchase. The barbed wire is total originations. 2024, what do you notice? $1.67 trillion purchase market. That's the third highest ever. This only goes to 2002, but just trust me, it's ever. And then 2025 is the second highest purchase market ever. Is that so exciting? Guys, I know it. So here we go. What are we going to do with our clients? We're going to scream from the rooftop. What are you waiting for in as kind of way as we possibly can? Supply is less than demand, prices will go up, and so education is key. Okay, how do we educate? I saw this post and snap a picture of it. I thought it was very brilliant, and so I want to show it to you. There's a lot of words on the page, but it's the script. This realtor caught my eye. She said this in a video, and it was a cute job. She did a cute job. She didn't have it edited or anything, but she said, do you think home buying in this market is out of the question? Is it too hard? Rates too high? Can I afford it? And then she said, you almost can't afford it. Let me tell you a story. I have a first-time home buyer closing this week for 1% down. Hold that thought. 30,000 under asking. I don't see that myself, but more power to her. We're seeing a little bit under asking, but that's exciting. So hey, you can get something under asking is the message there. Seller paid cost of 3%, went to a buy down. Her payment was the payment was $300 less. She's in the 6s, not the 7s. And I love this. They're getting a new furnace and other things that we negotiated. So it's like, yes, this is a great time to buy. She said, let me help you and tell you more about these programs. Isn't that cool? So then she's like, okay, my interest is peaked. Ding, ding, ding. Let me call you. What's going on? The 1% down is there's certain mortgage companies that have it, a couple U Mortgage and one other. They're offering 1% down on conventional. It's a very high priced program, and the rates are high. They're where normal rates would be in the 7s, they're in the 8s. So it's not special, but they got fined from the government for not serving the first-time home buyer sector, and so they are forced to have that be their penance until they make up the amount that they need to do for that sector. So they're offering 1% down and an expensive program. So yeah, you can have 1% down at higher rates. We've got Utah Housing that is not as high, that has 1% down if you want it, the 0% down if you really want that. So the 1% down, we've got it. Everybody should have access to that who has access to Utah Housing if they're not one of those 2 lenders at a better price. So we've got the ability for first-time home buyers. Let's look at this. Let's get you in. There are lots of grants. There's some down payment assistance. Sometimes they come, sometimes they go. Sometimes your income has to be at certain levels to get it. And grants are wonderful, but they're not for everybody. But we've got Utah Housing. We've got 3% down conventional. These are the ways that we're educating borrowers. And a conventional program for income used to be 67,000. Come and we'll give you discounts. Now in Salt Lake County, that's 102,000. It's like, whoa. So if you're under that, and one of you as a first-time home buyer, you get a little bit of a discount off your rate. You get a big discount if it's a condo, because there are certain adjusters on rates that come into play. But under that first-time home buyer protected program, you don't have the adjusters for condo or credit scores. And so it's a pretty sweet deal if you're a first-time home buyer, and making 102,000, you can actually afford 70, 80 with no debt. You're being able to afford some things in this market. So we are just educating like you can't believe, and having people get excited about what's possible out there, and the possibility to refinance. That is coming. So if you can afford it, let's buy it, and let's look at a refinance down the road. Another thing that I saw on a post, and I changed the pictures to protect the innocent, right? This was a question on a post. How is the current real estate market? And the answer was brilliant. The market is great. Their maiden name must be Jolly. The interest rates are right in line with the 40-year average. Qualified buyers are putting forth strong offers, and sellers are contributing to lucrative rate buy-downs, helping home buyers maintain a comfortable payment. Now tell me, what is keeping you from achieving your homeownership goals? So I thought that was a cute post. You can copy it and do that, make it your own. I saw this one. If you're looking to buy a home, did you know currently there are 100, I don't know how I missed the number, but over 100 homes under 400,000 in Salt Lake County or Davis County, or do you remember in 2021? We couldn't even find a home under 400,000. Now they are there, and somebody's going to want to buy them. So first-time home buyers, there are special programs for you. DM me and we'll change your life. You might not know what the special programs are. I do, and together we can be a duo to help these cute borrowers know if they can get into a home. So let's go. I have 30 ways to educate. I wrote down on a paper, and I didn't have it here. I'd read it to you. How I educated in the last 30 days. And it's about the down payment. It's about the special first-time home buyer program. It's about buying a second home, that now second homes can be rented, which they couldn't years ago. But my customer is buying a second home, and the rate's high and the payment's high, but he is going to Airbnb it or rent it to supplement that till he can refinance. That's cool. There's also investment properties that we have a conversation about. Okay, does it cash flow right now? Well, if I Airbnb it, it will, until I can put it into a long-term lease. So these are the things we talk about. We talk about refinancing. We talk about drowning in debt. I have all this equity and I really need to change homes. If I could have my cake and eat it too, I would want to get into a bigger home. Well, let's push some numbers. What if you sold and paid off this? I know you're going to lose your 2% rate, but you paid off this. We bought a new house, put less down. Your payment, is less than your cash flow. We've had a couple close at that where you just show them the numbers. A couple others who are drowning in debt, they have taken, they want to keep their home, they want to keep it, and that's okay. Let's do a home equity line of credit, pay off some of your debt, have some for the down, buy the new home, your new payment is less than the cash flow, and we're going to clean it all up and refinance. Can you carry this now? Can you rent payments will cover this much of it? And we've just closed on a cute couple here, and they are overjoyed. So there's just education. If you find people are drowning in debt, hey, let's look at some alternatives. We could get you out of some cash flow and take care of some cash flow issues easily, and things like that. We're talking about multiple offers. Sometimes you get a couple of multiple offers. How can we win? Well, the government lets lenders close in 8 days, not sooner. We tell you that story. We can close in 8 days. If it's needed and it's to dazzle the seller, and we'll do that. We're competing against cash. Wonderful. Let's put the financing and appraisal deadline within the due diligence, and let's just close in 8 days. And so we do some of that. It's just, how can we help you win? There's all kinds of ways we can educate. Credit is not what it needs to be. Well, then let's fix it. We have what-if simulators. We have all kinds of things that we can help create better credit, get credit scores up, take advantage of that. There's just everything. If you come to us with an issue, we'll see if there's a way through. And my motto is, there's always a way. So might be that we wait to buy them, and we need loans in 3 months and 6 months and a year, right? Yes, let's just help these cutesy borrowers get into a property. All right, here are some key points for discussion. How can we better educate our clients right now? And if you have an answer, fine. If you want to just have this be rhetorical, fine. But is there any way you think you can educate your clients better? You can let your lender be the heavy and just say, hey, I've got a lender, let's talk and we speak together. We can get on a Zoom call together and all talk. I have some agents who like to do that. That's really effective.
Talk about all those slides you just put up.
Yeah, exactly. And that you're just going to benefit. And the real key is, oh, I'm waiting for rates to come down. Well, if we invoke the appreciation for something is historical, what if it's 4, what if it's 8 in 2 years, then you're really not gonna save much. And you'll lose out on this much appreciation. Let's go. So, and then the shortage of housing, we really just want to make as clean of offers as we can. This is one of these points, is how are you getting offers accepted? It's the speed, it's the this, it's the that. I still have people who are giving non-refundable earnest money. We're back to the 2021 days when it makes sense. And we knocked it out of the park in those days. We got really, really good at competing against cash. So don't be afraid of that. Your eight offers, let's make yours the winning offer, and I'll tell you all the secrets. What are you doing to generate business right now? There's lots of ways, and it's, the low-hanging fruit is gone, but I'll join you on a lunch and learn. I'll join you on I can pay half on a marketing, real restful lets me do half. We can go in together. I can help you in any way. So what are you doing to generate business right now? Anybody have any thoughts? I'll tell you, this summer I did a top producer lunch and learn with, again, people are hearing crickets, and so I gathered the top 5. We had 5 on our panel, and they were the top of the top. I just went to Salt Lake County or Salt Lake numbers, and I'm like, okay, I called the first guy, he's in Italy, the second guy, he was gonna be away, the third guy's on my panel, 4th. I'm like, come, tell us your secrets. And so really it was I call my sphere of influence. But the guy said, I don't call them that. I call them my friends. I call my friends. And so it's like, that's awesome. So here's what you ask your friends. Who do you know who I need to know? Who's buying a house right now? Is that reticular activator? Is that what it's called? You buy a white car, you see white cars. You're talking about housing. It triggers something in their mind, and then they think of you when a friend or family member or associate needs a transaction. You've got to ask for the business. So it's just really coming up with creative ways and doing it and being consistent. So joint marketing ideas you can do with your favorite lender. I think there were 160,000 mortgage lenders, now down to 90,000. If your lender has left the business, we're still going strong. Let's talk. But there's some joint marketing ideas we can do, and happy to just go over any of your ideas with you and what's working and what's winning. Anyway, it's exciting. It's exciting. We have a teacher program where we're participating some dollars, and the real estate agent is participating some if they want. And we're going into schools and we're saying, hey, can we help with supplies? Can we help with crayons and paper? And then can we come in and speak with the teachers about home buying? And so it's exciting to do that, but you just have to, firefighter, we have a special program for that. Any industry will create a special program so that we can do that. And there's so many wonderful programs available. So let your mind just go, and let's come in and see what you've got on your mind. How are you seeing contracts getting accepted in this market? Don't be afraid of them. It's just your old-fashioned what does the seller want? And how fast can you close in some cases, and the buyer being qualified, do we get them qualified ahead of time, all that good stuff. So it's important to just be on your best behavior right now so we can get people in, and it's what counts, what closes that counts. How can you work on your business today to be ready for the shift? Because the shift is coming. So in the lull, I did this presentation in the lunch and learn, and a realtor said customer service. And I think that's excellent. Increase your customer service. Shore up what might not be working on your conveyor belt, because a happy customer is a referring customer. We are wanting to create a raving fan, so they tell their neighbors, their associates, everything. And if they have a poor experience, They might not want to hear from you again. We are asking all the way of referrals, not in an annoying way, but we say right up front, we want to earn the right to ask for your referrals, and we perform that way so that at the end they give us 5 stars and send their cousin to us. And so we feel we've earned the right to do that because we have a very stellar process. So there's some area that's weak, shore it up right now so you can be ready to spit out some raving fans, and they'll refer you as a beautiful, beautiful model. So, all right, we're almost there. Everything you do today is building your business for tomorrow. Do not forget that. Don't let short-term emotion invade facts and fundamentals, right? You have business out there, let's go get it. Rates will respond to a slowing economy. They will come down. I know it, I swear it, I promise it. I don't know when, but supply issues will remain, but we know how to win in a fast-paced market. We've done it, we keep doing it, we know how to win, we'll teach you. The biggest wave of demand in history remains. That's exciting, and for years to come. So you got to build that trust as fast as you can. There's pent-up desire to sell and buy. We know this, so there's some more demand. The forecast increasing sales and lower rates. The industry is not finished right sizing, so self-selection continues. Put in the effort and be one of the ones that makes it, but not only survives, but you thrive. There is a way to thrive in this market. I want to talk about the harvest and then going to Q&A. The harvest is not automatic. Those of you who ever have gardens, you know this. Too many times we plant and then walk away and we don't reap the full benefit of our planting, but we must water those seeds every day. You must prospect, you must time block, you gotta find the time to do it. What has stopped or slowed the harvest before will continue. We can't do anything about those external factors. We must change our actions in order to change our results. Harvest requires effort. So that's a good thing. It's that you can control certain things. Let's just control what we can control. I have wanted to show you this. My external finger is bent. Yes. I was playing basketball with my son when he was about 18, and I think I was winning. Out on the sport court, the basketball came my way, dislocated my pinky. And oh, it hurt, and it healed crooked. So I went to the doctor. I played the piano and I can't quite reach that octave anymore. So I went to the hand specialist and I said, could you re-break this and have it be straight? It can heal straight. And he's like, no, the scar tissue will cause it to heal bent. So I live with a bent finger. It's my external finger. I cannot do anything about it, right? All the external forces, we cannot do anything about them. We can do what we can do with our own efforts, our own attitude. So let's go out and just make it the greatest that we can and control what we can control. All right, question and answer. Anybody have any questions?
So this is all good information. What are you finding from some of your agents that is being the best way to reach out and present this information to their clients? Is it through social media? Is it through phone calls? What's working for some of your agents?
The one-on-ones,
The one-on-ones.
maybe instead of the spray and pray.
Yeah.
It's the one-on-one and hey, can we chat? And it's really phoning your database and finding the need and finding the life event or there's a need there, and then doing what you need to do. Can I visit with you? Can I take you to lunch? Can I come? Blah, 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 blah. Getting a group together if you want, but it's really honing in on what's meaningful to that person.
Conversations.
So the conversations, yes, but social media helps. Social media is going to help you build trust. And I'm not the social media expert, but about 8 months ago, I decided I'm going to get on that bandwagon. So I hired a coach that I really love her style. And it is that you're just putting out the content that helps people to engage with you and trust you more. So social media will just show you're open, ready for business, you're there, validation, and help you get to trust faster. So yes, but the follow-up is more important. And I can share this slide deck with you, and I can even help you put together your own little set of what do I show a customer. The slides about the red, the Federal Reserve ups and downs and the recessions and what happens after every raising, and some of the projections are helpful. It's helpful to arm you with calculations that you know a little bit of what if I buy now and my rate's in the 7s, what if I buy in a year and it appreciates and buy in the 6s. No change to payment. What if I'm in, wait 2 years and I'm in the 5s, but it's higher? You save about $200. So guys, there's not a lot, and you can even defer them to your favorite lender to talk about those, but that's always helpful because they don't know, they're scared of what they're hearing in the news. So I like the one-on-ones.
You need a slide that says, don't listen to CNN, MSNBC with the Ghostbusters through it.
Me too. And yet that's what we do, right? And so if they knew, if they just knew, but it's somebody meaningful who has the hope to buy, and then you cut them, you've got their emotions, and you're talking about certain things, and it works. Like you haven't gotten it to work on my niece, but it's an honor. Anyway, but yeah.
Have living color.
I know. Exactly.
I think that's a great marketing idea. What you just said is maybe calling your FOI, calling your clients or whatever. And rather than, well, just as an option, instead of have a one-on-one with each person on the phone, invite them maybe to a Zoom with Sharla or something, and get 3 or 4 of your friends on there and just say, hey, I'm gonna be presenting this to some of my friends and be on the Zoom call or something. It's a great idea.
I just
Great
did one, a lady, a realtor put one together at Murray High, and she brought 6 people together. And we just had the little snacks and then just sat there for an hour and just answered questions on the market. And so there were 6, and we'll follow up with them. That's really kind of the idea of the lunch and learn in a business. Don't discount that. You know, people who own businesses or in HR or can get you into a business, and there are people who really want to know this stuff and they're not represented. So
you did that at where did you do that
I have several businesses when I
go to there?
and I
There was
call
not.
myself their preferred vendor. But I go to benefits fairs, I go to lunches and talk, you know, around the conference room table. Then they're in their location and I'm coming to them.
I have 35 nieces and nephews that are coming into that age.
I know it. Hello.
So I'm thinking, you know,
Barbecue.
I know.
So, you know, come to my house, do a barbecue, and just happen to have the data here. You guys are gonna be.
And they're all doing the same thing. They're waiting for the rates to come down. They don't want to buy right now.
They need to see that. They need to see
they're all
that. And the math will show it, yeah. I'm a numbers girl. I did a post that just said, everybody says it's a great time to talk. I prefer to let the numbers do the talk, and let's talk. And I have projections where we're gonna see in 5 years, 20% depreciation in this market. You know, 5 each year, so that showing them the payments and the this and the that, and to lose out on this much appreciation, that's helpful. So we can do that. I can arm you with that, but you can't. You can knock some sense into them, right?
And they're just like, stop calling.
Yeah, you're losing out on some net worth. It's sensitive, my niece too, but there's some who might bite and want to, and you're helping them.
Well, I think you're a really good trusted source because of your background in economics.
Mhm.
Anyone that values education would know
Yeah.
that there's some truth to what you're saying that most people wouldn't understand, because how many of us are really good at economics anyway, right?
Yeah,
So I think using her as a trusted source,
That's
or
what I'm thinking, if she's willing to go to, because I can arrange it.
you get it. That's what I.
just let me know the
So-
facts, not that you want them to buy a house or anything.
Yeah.
You'll be in there with me to talk about,
Yeah.
you know, hey, together we just kind of tell them all the facts and, you know, run some numbers in a group. They don't want to talk about it. don't have credit, or I don't have this, or, and we can do that one off, but just to educate them, come to the barbecue or whatever. It's really powerful. That's what we're doing right now with our focus. So spreading the word.
We just sold on a home, just a couple weeks ago that, sold for $468. It was new construction, the exact same home, floor plan, everything was $605 a year and a half ago. And the buyer was nervous about the rates. And I said, if I gave you a choice, would you rather buy this at 605 at 3.5% interest rate, or would you rather buy it today
Yeah.
at 468 with your current rate? And what's interesting is he didn't know.
Yeah.
The fact that you have to think about it is enlightening. It's like, do you really want to have an additional $150,000 debt
Mhm.
Right.
when real estate always goes up in the future?
Yeah.
And he had to think about it, but it'd be nice to have a calculator and say, let's look at it and see what it looks like on math. Let's say rates do go to 5.5% in the next 2 years, and you run the math on it, where are you gonna be sitting?
Oh, yeah.
And you got it at 404.
Yeah.
Right, refinancing it, yeah, that lower price, but it made sense to him, even though I didn't have the exact numbers. It's like, I think I'd rather buy it at 468, take a chance, rates are gonna come down.
Because you can't do a thing about the extra that
No.
you're paying in 2 years. You can do something about the rates. So that's really powerful right there.
And the other thing I said to him is like, well, what if rates never do come down and you don't buy it?
Yeah.
Well, this is the lowest the rate's ever gonna be. So wouldn't you regret not buying today?
Exactly. That's the opposite of the other.
Right, it's like,
Yeah.
rates never do go down. Well,
There's
it's
really
still
two
going,
options.
you either should buy now or you should buy now. However you look at it, you should buy now. Right.
Exactly. It's wonderful. That's powerful.
I really like the tag team effort that you're suggesting too, like for your family and stuff like that, because. What do most people expect from us as sales agents? Of course, it's you want me to buy, of course you want me to sell or whatever. I feel even in some of our circles and stuff, that the credibility comes better from a trusted partner in the profession. Well, that's what she does, right? And you can help them with the marketing and if you're selling the property and the sale and the negotiation and this and that. But when you're talking about numbers and historical data like this, I think it's better presented by somebody else.
And then she references the MBA guy and.
Right.
Yeah.
Because they have expectations on what you would say.
Always easier.
That's how you make your money.
Mhm. Yeah, I did join one thing I like is if I can join a Zoom call with you and a potential customer who might be hesitant. And then we start talking numbers, and some like to disclose their information and others don't, and you don't have to, but as we talk, this cute single girl, she makes about 80,000, has no debt. She will qualify. Thank goodness, she'll qualify. So she's looking at a home in the 400,000s, high 400. We discussed, what if you bought one with a mother-in-law apartment, and I was able to have the agent to tell her, hey, here's what you're going to spend, and I can say, here's where your payments are. And he'd say, you can expect this much in rent, so your net contribution would be this. And so it was powerful where we ran numbers for her, and she is waiting for a great home with an ADU. And on the ADU, we can use income from it. And FHA just barely said that, like this week, that they can now use 75% of what the appraiser says the rents are, and that's added to income. So it boosts the qualifying income so their buying power can go up. That's a ding, ding, ding. That is a wonderful thing.
Especially in this county, where it's so expensive for first time buyers.
So that's cool. And it has to be a recognized ADU with the county, not a, it has to be legal, but you can do that. So that's been powerful. So let's join forces when we need to, and just, listen to the customers, listen to their concerns, and then just help them to make a good educated decision.
Another important thing to think of is they're not gonna come up with this on their own, right?
Yeah, your guy didn't.
Most of the places they're getting their information is the GLOOM in the news or whatever. So this positivity of, well, what options do I have? you inviting people to get together, it's just simply to talk scenarios.
Well, I would sweeten it with pie or something.
Yeah, I know.
But I'm, you need to investigate it, right? And find out what.
And anybody who does that, let's, you know, pay for
Well, I-
appraisal or whatever, so they
Call
can
homeless in their office.
Yeah,
I had one that went to my daughter and said, she's new, how good can she be? And I was just like, you're interesting. So.
You gotta
enjoyed
share
it
more
with
than-
all
But
this
yeah,
experience.
yeah, you've got a whole team around you, so yeah.
No one's gonna care
well,
more
it's
than you.
very fun. So if you have other questions, let me know. I don't know quite what time it's at. I can go off. Okay, here's the question I want to ask. Excuse me.
Sorry.
What, no, that's fine. I'm sorry. What is something you learned today? What did you learn today?
So when you leave voicemails, you're buying brain cells.
Why not? Thanks.
Yeah. Gonna go buy some brain
Go
cells.
buy some brain cells. Anybody else?
I like your stats on the phone calls, 2 out of 5,
Yeah.
5 every 30 minutes. It just gives you a little bit of a mindset. You know, what you
Nice having
can
you.
do.
And then it's, so the connection and the brain cells,
Hmm.
if you sit down and you're like, what the heck am I gonna say? And I'm gonna share our scripts and I have, what if we get a live person? What if we leave voicemail? What if we text? And so then with follow-up email. So I've got all that, you make it your own, but it's in every scenario, you know what to say. And then like the live conversation, allow time for them to, you know, chit chat, this and that. But if you do leave a voicemail message, you could easily text and that's a second contact. And then, or email, and that's a second contact there. So just let the voicemail go, but follow it up with one of those other things. They may not call you back, but they got your message.
You know, Cheryl, one of the things that people preach all the time is the dedicated time, you know, set aside X amount, like you were talking about, 1 hour, 2 hour, 3 hour, whatever. I think that depends on your personality. I've always been the kind of person that if something pops into my head, I don't need to set aside 30 minutes or an hour to call somebody, right? If I think of you or think of Jeff or James, I'm one of those types that it just pops in my head. I'm gonna call you right now. I'm gonna email you right now.
Terry,
So-
not everybody's like you.
So anyway, that's another way to think about it is
Just-
act when information comes before you. You don't have to say, oh, I gotta go tomorrow from 11 to 1. It's like, do it right now. Right? Why not?
Just do it.
Yeah.
All right, then I want to get your lunch. What's something you're excited about today that you'll be implementing?
Boom, not gloom, pent up demand.
Yeah, there's an
I was
opportunity on the
thinking-
horizon for sure.
And you can just crush it this next 60 days. You may have to plant a lot of seeds. We're in the season of planting, but don't be, I mean, holidays are upon us. Don't just check out, guys. There's opportunity and then look at the momentum. You'll just be ready for the next year. So.
You know, Sharla, in any sales situation, this is sales, you have to. Your efforts don't always just fall out of the pipeline from day one, so it usually takes 3, 4, 5, 6 months, so whatever you're doing today, as we all know, falls out later. I want all that to be falling out when this turn happens, right, like you said, so I look at it like whatever I'm doing right now is just helping me get ready for it, right? So.
So do it. All right, there you go. Okay, go forth and conquer your future.
I love it. And guess what? You have less competition today too, guys.
This is true.
And you'll have less next month and next month.
Of buyers, of real estate agents and vendors. So, yep. Okay,
Yeah.
there you go. Oh, thank you.
Thank you. Awesome. Hey,
Real team.
That's
Lynn, why don't you did a deal with Sharla? Sharla, and can you just tell them about your experience working with your team?
Yeah, I should have done that at the very beginning,
That's
because
all right,
then
that's all right.
she would be all of your trusted source. Honestly, it was so smooth, so, first of all, the client was a tenant of mine, and he had met her and actually went to her office. And he told me about all of her awards and how amazing she was, and I'm like, yeah, you know, just kidding. But they have their systems in place. I mean, I knew everything that was going on. Even though I know she's really busy, she took the time. She would send me messages and also video. just kind of updating me on what was going on. It was super smooth. The client actually walked into a lot of equity and is so excited. He was very scared to buy because of all the doom and gloom, right? And he's so happy, and it was just seamless, and yes, and I loved working with them. And you know, I'm not easy to please, right? Because if someone doesn't do a good job, I don't go back, but yeah, so I absolutely, absolutely love them. I couldn't say enough, and that's why they're here, because I think you guys would really love and enjoy working with them.
We do.
Thank you.
Tiffany is
For that.
wonderful. So she does the heavy lifting, liaisoning with underwriting and things, and just amazing. And it wasn't the easiest transaction in the world. There were some, you know, choppy, this, that, and the other, but we know what we're doing, and we knew, okay, there's a deal here. Let's fix this. Let's do this. Let's do this. I can't quite remember exactly, but it wasn't a vanilla. Where's the easy button when you want? It's
Correct.
not there.
Well,
But
sometimes
we
you have
know.
clients that get things to you quickly, and then
This is true.
there's others that ignore you for a while and get
Yeah.
them to you when they kind of want to.
But it's
Well, what do we-
the expectation that we set up for them, and then anything that we found that they were crying hard time, we did all the legwork. So, you know, with credit unions, we take their authorization, go to the bank, get our statements, do everything we can do to make their life easier. And that's kind of what we want them, even in the hardest and the worst file you can ever have, we want them to walk out from like it's painless.
Because a happy customer is a referring customer. Yes.
Well, I love that because you're creating an experience for them, not just getting it done. We've all closed buyers and sellers at the closing table that aren't happy. They've had a shitty experience. For one way or another, and a lot of times it's communication or it's something that happened or whatever, that they felt like they, you know, being asked for the 100th time for another statement or whatever it might be. So I love to do that, is create that.
Well,
kind of-
ours, so up front, we're like, here, we need these 20 things, instead of, give me this, and then, oh, I need this, I need this, I need this, we're like, we need this. And we're staying on it so we can go into underwriting, beautiful, then we have minor conditions, get them closed. Now, that comes from years of experience, did I always do that? No, I got the ones, even then a customer, you gets later, why didn't you ask me for that earlier? Why didn't I? And then you change your systems, and so I have the advantage, because I was there, never going back there, because it creates such a great experience. But are we perfect? We're close, but we, you know, the bell curve, you got people you can't, the grumpies or whatever, we made a mistake or whatever, but for the most part, that's why we're so anxious about our customer service. We want that raving fan to then refer their uncle to us or whatever. So anyway,
Do you do loans in Oregon?
I do, I'm licensed in all the western
Nate,
states.
that was for you.
Yes, Colorado, I don't have a license yet, and New Mexico, everywhere else.
Oh,
No,
nice.
wait,
Do you do DSCR loans?
yes,
Okay.
yeah, we do, not a lot of them.
I would say with her team, if there's a way to do it, they're gonna get it done, and they're gonna brainstorm. It's not gonna be just a black and white, you know, they're gonna try to figure it out. And so any kind of file.
Yeah. We save the day often, and we are good in that if there isn't a way to do it, we know right then, so there's not the wasting of the time.
You guys know what you meant by save the day?
Yeah.
The other lender's not getting it done.
Yeah,
No,
the rest
You
of
call
it.
somebody else.
Or they've gotten it denied, or wanna look at all of those.
Or, yeah, they were told no.
Ghostbusters.
So what?
Ghostbusters, like who do you call?
Yeah.
That's
This is awesome.
So anyway, that's a little bit about us, but Common will take care of you if you have a lender, fine. If you need a backup, put us in second position and we'll perform like we're first when you call upon us, right? We don't want to, you know, get your lender out of the way, but we will be there if you need a good
I'll
result.
put that on a bumper sticker. Okay, you guys, she brought some lunch. Thank you for that as well. Thank you. You guys can stick around while you got the lunch. We can chat some more. See you, Nate. Thanks for sticking to the end, buddy. Bye, Nikki.
We had a good turnout.